can't handle the truth.
Hello everybody, my name is Ifan Yuban. This is 360 Degree Mastery. This is the channel where we teach you personal effectiveness, self-mastery, and how to create, grow, and manage your wealth. Today I want to talk to you about how to invest in the money market. Now, on this channel, I have talked to you before about the 5 laws of wealth, especially the law of investment, and I've told you that you cannot build wealth if you do not know how to invest and create streams of income. I have also done a video where I talk to you about investing in real estate, the 4 things that you should know and do before you set out to buy land. Now today I want to talk to you about how to invest in financial instruments, specifically the money market. Now the capital markets and the money market, they are similar, and I know that some people use them interchangeably, but they are not the same thing. I'm talking about the money market and not about the capital market. The differences are actually quite simple. Money market instruments are instruments whose tenor are usually less than a year, and capital market instruments, their tenor is more than a year, sometimes 3, 4, 5 years and higher. Money market instruments are usually lower risk than capital market instruments, and also the purposes of both instruments are different. For capital market instruments, you buy them and you hold them over a long period of time because you want to build great wealth. But money market instruments, you buy them and you hold them for a short period of time because you want to consolidate the wealth you already own, or you want to stabilize your finances. Right now, we have gotten the differences of both capital market and money market out of the way. How do you invest in the money market? Now, rule number 1 is for you to start small and continue to build up as you go along. Okay, when you are starting out, you're investing in the money market, start with low risk, low yield instruments, like maybe treasury bills or call deposits. Then as your risk appetite grows, as your confidence grows and you gain more experience, then you can begin to invest in riskier money market instruments like commercial papers from companies that do not have an A+ risk rating. That is rule number 1. Rule number 2 is for you to understand the reason why you are investing in the money market. Like I said before, money market instrument investment is usually to stabilize, to consolidate whatever wealth you have. I do not advise people that just want to start creating wealth to launch straight into stocks and bonds, or into private equity investments. No, I tell them, you know what, start small, all right? Consolidate what you have. Understand why you are investing in the money market. You are trying to build wealth, but at the same time, you are trying to stay sufficiently liquid enough that your wealth is accessible to you at all times. Rule number 3 is do not invest in only one instrument all the time. Mix and match. Today you can do treasury bills, tomorrow you can look for a CP that is relatively low or high risk, and then the day after that maybe somebody can tell you about a call deposit that you can purchase. Mix and match. Don't put all your money in one instrument. That way you have different tenors of instruments, and then you have income coming in at various points, and your money is not entirely at risk and the hands of only one debtor. That is rule number 3. Rule number 4 is for you to have an emergency fund that you can call on whenever an investment comes up. Now, in the money market, there are usually quick investments. Some companies, they want to run projects and they need to raise funds very quickly. So what they do is they go out and they issue CPs, or perhaps the government is trying to complete the project and they issue treasury bonds for people to buy. When your broker tells you about this, you should have some funds available so you can take advantage of it. All right, do not always put all your money in long-term investments. Stay sufficiently liquid. Create a pool of emergency funds so you can take advantage of opportunities, quick money market instruments that usually, the quicker they are, the higher risk, so the higher returns. You can take advantage of them and you can make some extra money. Now, rule number 5 is for you to track your investments. I always tell people, whatever it is you are doing, whatever it is you're investing in, you need to track it. All right, in this case, you need to read newsletters from your broker. You need to go on financial blogs and read and keep up what's going on, keep up with the news, make sure that you know what is is happening in the money market. Make sure you know what is happening with the companies whose instruments you have purchased, who are owing you money. That way you can take a decision to sell, liquidate, or to hold, to buy more if the opportunity arises. All right, remember, the greatest power that you have in investing is the power of knowledge. So make sure that you are informed at all times. Track your investments. How do you see this video? If this video was helpful at all, please go ahead and click like, share this video with somebody who needs it. Okay, subscribe to my YouTube channel. And for those of you who have been complaining in times past that you're finding it difficult to log into saskeventures.com to purchase Ifeanyi Ubah books, go on to Gigi, Konga, or Jumia.com, log in, search for the books by title or by author. They will pop up. Go ahead and make your purchase. My name is Ifeanyi Ubah. This is 360-degree mastery. I'm wishing you a prosperous week ahead. Please go out, do something, do some exercise. Okay, take care of yourself, eat right. All right, do something nice for somebody today. Observe the safety protocols and watch your investments, track your investments. Okay, make that money. I will see you next week, God willing, with more tips, more information on how you can create your wealth and how you can become a better you. Namaste.